Alright guys, what's up? I wanted to address a couple of questions that I got regarding my previous video and my choice of liquidity zones. So my previous strategy, as you guys know, I used 9 AM high and 9 AM low as my key liquidity level. Price would sweep one side and then we'd long or short depending if the low was taken or the high. Right, I have switched it to London high and low, and some people are asking why exactly I chose. So I'm going to have a very quick explain to you guys. I'm going to explain very quickly why I chose London high and London low. Right, so I noticed 9 AM high, 9 AM low when I first found it was really good, right? Because 9 times out of 10, price would push off it, right? And then you'd get a market structure shift and a fair value gap, and then you'd enter targeting the other side, right? Very, very common strategy, very good, right? However, when I was back testing it this time, after a couple of losses, things like that, testing it out and things, I noticed that London high and low is the key liquidity level. Yeah, 9 AM high and low still does work, so if you want to use it, by all means use it. It's just more the fact that London high and low is obviously the previous session high and low is a more probable area for orders to get filled, because that was where orders would be resting from the London session, right? So when price sweeps it in the New York session, which it usually does, right? 9 times out of 10, it will. So there's been a lot of times where I would, let's say we would take 9 AM high and then London high would be a little bit higher, but we would wait for a market structure shift and a fair value gap, and then price would continue to just London high, and then I get stopped out, which is great. Whereas if I use London high and London low as my key liquidity levels, then I have a higher probability of price pushing in the other direction, because there's a higher probability of price filling orders. That is exactly why I filled orders, right? So you want to find key liquidity levels and trade off them or towards them, depending on how your strategy works. So session highs and lows are more probable than hourly highs and lows. That's all you need to know.